Good afternoon, everyone. Welcome to today's daily recap. It is Friday, November 20th. I'm Evan Lazarus. I'm filling in for Scott, the Red Dog Redler, today. Uh, let's see. We continue to ride a very, very volatile market, and the market has been just going back the last, couple of months, very, very back and forth, in a sense of, lack of follow through. Lots of turns, lots of misdirections, lots of head fakes, lots of downs that you're not getting continuation. I guess is really what I'm trying to say. Maybe not in the most eloquent way, but this the breakdown we saw in mid-August didn't, as powerful and as aggressive as it was, didn't get any follow through. So whereas a lot of traders were looking to short the bounce, while you did get a little bit of a turn down and a retest of the lows, we're now back. It turned and ran right back to where it broke down. And you can see the market has built, pretty substantial resistance up here. As we look at the S&Ps and the spiders in this particular chart, you can see that strong resistance zone that's basically built almost the entire year, having tested into this area, multiple times. So now that we're back up into this range, this is where, the market really needs to kind of build a base, in my opinion. If the market's going to continue to move higher, I suspect that you are going to, probably see some sideways consolidation up here for what could be a week or 2 weeks, if not longer, and then potentially, from there you could see a new market move higher. Right now, it's kind of a day-to-day approach. I really think you have to be very tactical in this market, more so now than ever. As we flirt, with resistance here, this is where things get hard, because this is typically just like its support, where we've seen turns, and this market has been notorious for, lack of follow-through. So if looking back is any indication of looking forward, then I think you need to play. You need to play this market with a sense of, being pragmatic more so than optimistic. The optimistic, side of the glass says, we're going to go higher this time. But every time, the market has been back into resistance, has not necessarily. The optimistic bull, has not been proven to have much success. So, let's kind of take it one day at a time here. Today's trade did see slightly higher on as a result of a gap up. Market gapping up, and we can look a little more intraday here. Here's a 2-hour chart. You can see that early morning gap up right here. And we basically went sideways for the better part of the day, and then, kind of trading off later in the day, only to close basically right where we opened. So you can kind of see a more granular look at today's trading. So the market not really making much progress in terms of a trade today in terms of a directional move, but we did see higher prices. So as we look at this time frame, and we'll kind of zoom in on the last few weeks and stay very granular here in terms of not looking out too far. The market topped back here in November, and right around the beginning of November is where we peaked, and then we came back to support, where we then turned, and now we're back sort of up here. This is the area we sort of broke down from. We tested into there today, and again sold off. Didn't see much in terms of follow through here yesterday. It was a very narrow range. Pause type of day that led to a gap up. We didn't see any buyers really step into that in terms of the general indexes. So I think you need to be on alert come Monday. But it is a week to week environment. I think it's most eloquently stated here on a weekly chart. Last week we saw a sharp move down. This week retracing that entire move. So very hard to call here as this market, like I said, with a flat 21 EMA, you can see this red line in here. That's your 21 week exponential moving average. So long as this kind of stays, flat to neutral or flat-ish, I should say, I would expect more of this back and forth type of trading, as these weeks continue to move on and on and on. Now I know that's, that can be a very frustrating and difficult trade to make or to be involved with, but that's, we got to respect the language of price here. As far as individual names that, saw higher today, Google gapping up and taking out old highs, and let me just remove here. So you can see a Google gapping up today and taking out highs. So Google back into new highs here today, as it, we got one pullback, and that pullback again was another buyable scenario here. So ever since this stock has held this earnings gap, it continues to trade higher as you have bullish time frames both here on the daily, and you can kind of go back and even on the weekly. Now it's getting obviously a little extended, and this could lead to some more short-term upside as we look at the weekly. It looks like we're starting to maybe get into a sort of lift-off mode here. So I'd look for this momentum name to possibly have some more upside as it continues to break away. You have the 21 down here. It looks like it's starting to pick up that that speed here, and we may see that that shoot up higher, which is typical of signs of what sometimes you refer to as a blow off top. And I'm not saying that that there's going to be a top put in here, but at least the faster and the more aggressive this trades up, then the more likely it is to snap back. So, but nevertheless, in the short term, this could lead to much more upside in the coming days. So another name I'd look to for follow through, possibly early next week. A lot of the momentum stocks, high beta stocks, the Apples. Apple's hasn't really gone anywhere. I think Apple's sort of dead money at this point until it's not. But basically, this whole complex since September has done nothing really of any substance. Yes, you've seen a week or two of up and a week or two of down, but net, look at the 21 EMA, flat, really flat to neutral, and this is the signs of the type of trading environment in these types of scenarios. So. Not much to report there. Facebook, another name that continues to hang at highs. Where is my symbol? Okay, so here's Facebook. Another name that's building some energy, possibly for another leg higher. Continue to monitor this overall structure. But nice, bullish consolidation in here. So keep an eye on that one. Going into next week. And it really was a mixed bag today. Oils and energy names, Exxon, turning down a little bit. Schlumberger, Chevron, all those types of basic material names turning down. Healthcare basically neutral. Banks were flat to down a little. Goldman, I think, was down slightly today. Wells Fargo down a little bit, and JP down a little bit. So a little bit of a mixed bag here. Overall, not much to report on today's price action. But nevertheless, the market remains very, very choppy. And like I said, while the S&Ps remain, firmly kind of hovering at highs and let's go back in time. We have been hovering in this area for, a year, what feels like, but yet to get that real breakthrough. I don't suspect it's going to happen, in the next week or two, but we'll see. A couple more weeks of some sideways consolidation in this upper area could be, and again, these are weekly candlesticks, could be an impetus to take this higher. I'd like to see the 8 continue to rise and the 21 continue to turn up a little bit. And the only thing that I think that the only thing that'll get those moving averages to kind of start to turn back up, and just like they were back here. Will be some time. So time spent in this area could be constructive for the bullish scenario for the overall market. As you look at other indexes, you look at the IWM, here's the Russell, you're not quite seeing that, that strength in the Russell. Let's see, the NASDAQ, where's my NASDAQ? The NASDAQ 100, again, NASDAQ continues to lead. NASDAQ continues to look like it wants higher, closing right at resistance for the week. So, that's where the focus should be. The NASDAQ 100 and the stocks that, kind of make up that is probably where you're going to get let's call it the easy money right now. Focus on, if you're a bull and you're looking for long opportunities, that's really where your attention should probably be. As that's, these are the stocks that are probably making new highs. So, focus on pockets that are, acting well. I would say stay away from, harder money type of trades as the market continues to chop back and forth. With that, I hope everybody has a nice weekend, and we'll talk to you later.